Hello there. Welcome back to my channel. In this video, I want to look at the preparation of the departmental income statement. So we have got a past exam paper that we have that we want to look at. So this is question 5 on this question paper, and you see that the question 5 requires us to spend on average 34 minutes. So on the required, it reads, use the information given below to prepare the departmental income statement for the year ended 30 June 2013. So the information part, of course, we are given coded enterprise trends in men's wear and sports equipment. All goods are marked up at 50% on costs. The business operates by using the periodic inventory system. So you should be able to differentiate between the periodic inventory system and the perpetual inventory system. Remember, in particular, according to periodic inventory system, we are going to be concerned with the movement of inventory on stock. You'll see that in a periodic inventory system, when there's stock movement, we record that in the purchase account. In other words, when we receive stock, we are supposed to debit the purchase account, and then which is different from the perpetual system, whereby we are saying in the perpetual, any movement in stock we record in the trading stock account. So, in particular, we'll see that as we go with the question. In terms of the general information, we are given that the Department of Menswear and Sports Equipment. So those are the two departments that we have. So number of acres that we have, we've got the other menswear, we've got 4, under sports equipment, we've got 6. Then in terms of floor space, the menswear has got 40 square meters. The sports equipment has got 60 square meters. So this is the information that is going to help us when we are now allocating costs between the two departments. So going forward, our question, we are given these balances that we are given, whereby we've got the menswear department column. We also have the sports equipment department column. So we take note of that. Beneath that, we've got additional information which you just need to go through before you start to answer the question. So with that, we can proceed to our answer section, whereby we have this departmental income statement for the year ended 30 June 2013. Of course, we've got the column for menswear, and also we do have the column for sports equipment department. So remember, this is a departmental income statement. It is an income statement. So of course, we have to start with ourselves. So remember, the layout that we use for the income statement is that we are supposed to have ourselves. So we are saying our sales, and we are supposed to have the sales for menswear department and sales for sports equipment department. So we refer back to the information that we are given, and we see that according to the balances that we have here, for sales, we have it here, and we have got 570,000 that we have for um, men's wear department. So according to our calculations, that is 570,000, and then we've got 429,000 for sports equipment. So we are just going to correct this 570. That is supposed to be our 970. So you can just put it as 970 according to the requirements of the question. There was a mistake that is there. So basically, we are saying 970,000, and also we have got 429,000. So going to our answer section, we are going to transfer a net figure of our sales. So how do we find it? We say sales minus sales returns. So if you notice here, we also have a sales returns that we have here. Sales returns whereby we have 6,000 for the menswear department, and so we also have 4,000 for sports equipment department. So what we are going to do is we are going to check again if you have got any adjustment that is affecting our sales before we say sales minus our sales returns. So if you go through our additional information, you are going to see that we do not have any adjustment that is we are having there that is affecting our sales. Remember, you would have gone through everything before you start answering, so that you can quickly locate that where there is an adjustment that needs to be affected. So in this case, we are saying for the sportswear department, we are saying the sales figure 970,000, and then we subtract our 6,000 to get the net figure for menswear department. So we just show the working in brackets, whereby we are saying 970 minus 6,000. So if you say 970,000 minus 6,000, you are going to get 964,000. So it means we have got 964,000 for our menswear column. And also, we need to adjust for sports equipment. So we check again in terms of the sales figure that we have for sports equipment. We've got 429, and then we have got the sales returns for 4,000. So we're going to say 429,000 minus 4,000. So we show the working in brackets. So basically, we say 529,000, we subtract 4,000, and the answer that you're supposed to get is 425,000. So we have again 425,000 is our net sales figure. So from there, we are now supposed to say less cost of sales, of which we have to also check in terms of our cost of sales. We see that our cost of sales, we are not given a figure for cost of sales. Remember, you might be given the figure for cost of sales, but in some instances, you won't be given. So it means when you are not given, like in this case, you have to calculate it. So how do you calculate it? You have to utilize the formula that says our cost of sales is equals to your opening stock of inventory. Opening stock of inventory, you add your purchases. If you have got purchase returns, you're supposed to subtract them here. You add your carriages if you have got them, carriages on purchases. And finally, you're supposed to subtract your closing stock. So this is exactly the formula that you're just going to employ there. So going to our answer section, it means we are going to calculate that figure for cost of sales. So we are saying opening stock. So, but according to the information given, it's that the opening stock that we have is trading inventory on 1 July 2012, which is at the beginning of the period. So we can just say opening stock or trading inventory 1 July 2012. So we say trading inventory 1 July 2012. So the figures that we have got 316,500 for menswear, 170,000 for sports equipment. So we do enter them as such, whereby we are saying 360,500. The other sports equipment, we have 470,000. Then from there, according to our formula, remember we are saying after opening stock, we add our purchases. If you have got returns, we subtract the returns so that we put the net purchase figure, like what you did to sales. So we are saying purchases. So we check to according to the information given. So you would see that according to information given for purchases, we have got a figure for 320 for men's department. And we also have the figure that we have for sports equipment, we've got 160,000. So we check for returns. We see that we also have purchase returns. We don't have anything for men's wear department. but we've got purchase retails for sports equipment 2,500. Then from there, before we adjust, likewise, we go to a transformation to see if we have got any adjustment that is affecting our purchases. So if you come to add additional information number, number 2, it reads on 30 June 2013, a suit, shirt, and tie valued at 2,700 was transferred to the sports equipment department. No entry has been made in the books. Remember when you said when there's any movement in terms of our trading stock or inventory, according to the periodic inventory system as indicated here, we are supposed to adjust that in the purchase account. So we adjust this movement that is taking place. We've got inventory that is moving from the menswear department in the form of our suit, shirt, and tie, 2,700, and it's going into the equipment. So basically, from where it is coming from, that is the menswear department is going to be a negative, and then it becomes a positive is an addition to the sports equipment. So basically, that's what we are. So on our calculation on menswear, we are going to say the purchase figure that we have is 320,000. We say 320,000, then we subtract the movement out that we have, which is 2,700. So basically, that's what we have. 320,000 minus 2,700. So here in brackets. So let's calculate and see what we get. So you're going to see that the answer that you're going to get is 317,300. 317,300. And then obviously we need also to adjust, and we adjust for the equipment, the sports equipment department. We check according to the information given again. We see that the purchase figure that we have is 160. We do have purchase returns 2,500. So we're going to say 160,000 minus 2,500. And then we've got an addition of 2,700 that is coming from the menswear department. So we add again to 2,700. So basically we are saying 160,000 minus 2,500 plus 2,700. So we just show that calculation whereby we are saying 160,000 is indicated, 160,000, then you subtract 2,500, then you add the additional that we have here, 2,700. So we say 16,000 minus 2,500 plus 2,700. So the net figure that we are supposed to get there is supposed to be 160,200. So we have 160,200. So that's what we have on purchases. So remember, according to our formula, after we've added purchases, we check if we've got carriage. Carriage on purchases. We check if you've got carriage on purchases. So we go to, we see that we've got carriage on purchases. We have it here. Can try to zoom out. So we see that carriage on purchases. We have it here. We've got 18,000 for the menswear department, and then we've got 9,000 for the sports equipment department. So that's what we have. Then we check before we enter them. We check if we've got any additional information affecting our carriage on purchases. So if you come here, you'll see that we have our additional information number. We see that we have got number 3 saying carriage on sales. And remember, carriage on sales falls under expenses. It doesn't fall under cost of sales. So we have carriage on sales 800. Carriage on sales still outstanding. We've got sports equipment department. We've got 800. So we can just ignore that one because it's not carried on purchases. So we check. We see that we do not have any other adjustment that is affecting our carriage and purchases. So in that case, we check the figures that we have, whereby we are saying carriage and purchases 18,000 and 9,000. So we go and enter that as carriage and purchases. So remember the figures that we have got 18,000 and 9,000. 18,000 and 9,000. So with that, we can now close there and add to get remember to get the total. We are saying open inventory plus purchases plus carriage inwards. Carriage inwards, which is carriage and purchases. So in the first column, if you say 316,500 plus 317,300 plus 18,000, you're going to get your answer as 651,800. We can just try to verify this calculation to see if we have added correctly there. Whereby we are saying 316,500. And then we add our 317,300. And then we add again 18,000. So we are going to get 651,800. So we do the same for the second column, whereby we are saying 170,000. And then we add 160,200 plus 89,000. 339,200. So we have 339,200. So basically, this is what we have. And then after that, now we have to subtract our closing. Let's just subtract our closing stock. This is less trading stock. In brackets, we put the closing date. Remember, the closing date is 30 June 2018. So basically, this is what we have. We pick the figures that we given as our closing stock, whereby we have 95,000 and 82,500. So basically, this is what we have on the past. And remember, we are saying less, so we are subtracting. And then we can as well close. So after we have subtracted, remember our answers, we have to come here as representing our cost of sales. So by so doing, we are now saying 651,800 minus 95,000. So let's just try to calculate that one. 651,800. And then you subtract 95,000. So we are going to get 556,800 is our cost of sales. We are again saying less here, cost of sales. So we can put brackets again so that we are subtracting. We do the same thing here. 339,200 minus 82,500. So we are going to get 256,700. 256,700. So here we are saying, so we are putting brackets again to show that we are subtracting. So with that, we can now be able to calculate our gross profit. So remember our gross profit, we are saying for the first column, we are saying sales minus cost of sales, then we get our gross profit. So our sales, 964,000 minus 556,800. You're going to get your gross profit as 407,200. So we do the same thing in the next column, whereby we're saying 425,000 minus 256,700. We do calculate that, see what we get. 425,000. Then we subtract 256,700. And you are going to get your answer as 168,300. So that is your gross profit. So from there, remember, if we get a negative figure, and that is in case our cost of sales, we are having a figure that is greater than the sales figure, it means we are going to have your answer here is a negative. So if that transpires, it means we are going to leave it in brackets to show that it's a negative figure. So we proceed from a gross profit. We are supposed to add other income if we have other income in the question. So we are just saying add other income. So examples of incomes, we can talk about discount receipts. You can talk about rent receipts if we have them in the question. So we check for those. We try to see what we have. See that we have got discount receipt, which is given as 1,500 and 800. So we can just check if you've got any additional information affecting discount receipt. Obviously, you have to go through everything to check, and we adjust. I see that we do not have, so we go and we enter the figures that we have here as discount receipts 1,500 and 800. So this is what we have for this part. We'll check if you will still have another other income that we have there. But we are going to notice that according to what we have, we do not have any more other income. So we can as well close add other income, which is 1,500. Remember, we've identified as discount receipt. So we are supposed to put our discount receipt beneath here, whereby we have 1,500 and 800. And of course, after that, we're supposed to close so that that's what we have only. And the total becomes here. If we had more than one other income, we're supposed to list them. And then the total comes here. So this is what we have in this part. We now say gross profit plus other income. Then what we are supposed to get should be our gross income. So here we are supposed to have our gross income. So we are supposed to have our gross income. So we can just try to add as such, whereby we are saying for the first column, 407,200 plus 1,500. Then we get the total for our gross income. Over the first column, we are saying 407,200 plus 1,500. And then the answer that we get for our gross income becomes 408,700. So we have 408,700. In the second column, 168,300 plus 800. And then we get a total. Let's try to see what we get. 169,100. So we have 169,100. So from there, we are supposed to move to our expenses. So we are saying less expenses. So we list all the expenses beneath, and then the total of the expenses will now come year for the first column and year for the second column. So we pick those expenses from the list that we have. We can start from the beginning to going down, checking all the expenses that we have. So the first one that we are seeing, there's carriage on sales. Carriage on sales, so we can just put our carriage. Carriage on sales. So the question is, what figures do we have for carriage on sales? We do have 16,600 for the first column, 25,000 for the second column. But of course, we do have that adjustment that we picked earlier of carriage on sales, which is saying carriage on sales still outstanding sports equipment. So it's outstanding only for sports equipment, 800. So we know, and we know that when it's outstanding, you're supposed to add. So we add to sports equipment. So, but for menswear department, we pick our carriage on sales as 16,600. So we are saying 16,600. But for the second column, we are supposed to add, whereby we are going to say the carriage on sales that we are given is 25,000 plus the one that is outstanding, that we are told that carriage on sales still outstanding, we put 800. So we are supposed to add our 800. It becomes 25,800. So this is what we have on this part. And then we check another expense that we have just beneath our carriage on sales. We have got sales returns. We did adjust that in the trading account. We go to purchase returns. We did adjust that. Discount received, we adjusted under the income. We have now sundry expenses, 18,000 for menswear department and 14,000 for sports equipment. So, but before you enter them, remember you have to check any additional information that is having any adjustment for that. For sundry expenses, we see that we do not have. So in that case, we pick the figures that were given in the balances, 18,000 and 14,000. So we have a sundry. Sundry expenses. And what figures do we have? Remember, we have picked our figures is 18,000 and 14,000. 18 and 14. So we can just enter as such. So from there, what do we have? Sundry, we've got salaries. We're given it as one figure, 440,000. But if you come on the first additional information, it reads costs are all allocated as follows. Salaries as per the number of workers. So This is our salaries, number of workers, of which we are given the proportion of the number of workers at the beginning. We can just try to check. Here we have got 4 for menswear. We are seeing that we've got 4 for menswear and we've got 6 for sports equipment. So the ratio is just simple. It means the denominator is going to be 6 plus 4. Then for menswear, we're going to say 4 over 6 plus 4. Then for sports equipment, we're going to say 6 over 6 plus 4. And of course, this is going to be 4 over 10, and this is 6 over 10. So basically, that's what we have. And then we calculate with the given figure, with total, which is 440,000. So here we are saying salaries. And for salaries, remember in brackets, the first one is 4 over 10 times 440,000. And for the second one, it's 6 over 10 times 440,000. So we do calculate for the first one. What do we get? We see that we get 176,000. So we have 176,000. For the second one, 6 over 10 times 440,000, we get 264,000. So that's what we have on salaries. After salaries, we have got rent expense. One figure again. We come again on additional information number 1. We're told that rent expense is per floor space. So check proportion of floor space. So we see that for floor space, we're given it is 40 and 60. So the same thing for menswear. We are saying 40 becomes the numerator and the denominator is 40 plus 60. Then for this sports equipment, we are saying 60 over 40 plus 60. So the denominator will be the total. So in this case, we see that we can simplify it further to become 40 over 100. And here it becomes 60 over 100. So we multiply it by the total that we have for rent, which is 118,000. So we calculate it like that, whereby we are saying this is our rent expense. Whereby in brackets, the first one is 40 over 60 multiplied by 118,000. And for the second one, we are saying 60 over, sorry, it's over 100. So here we can just make a correction. It's over 100. And then here 60 over 100 times 118,000. So for the first one, 40 over 100 times 118,000, you get 47,200. For the second one, 60 over 100 times 118,000, you get 70,800. So basically, this is what we have in that part. I will move on to the next one. After rent expense, we've got advertising 45,000, and we are told again advertising to be shared equally. So equally is just 45,000 divided by 2, since we have got 2 departments. If we had 3 departments, we're going to divide by 3. So in this case, we see what we get. We get 22,500. So we check in terms of that, whereby we are saying advertising. Whereby it's just 45,000 divided by 2. and we got 22,500 and 22,500. So this is what we have on that advertising, and I will still have any expense. I will check. We still have any expense that we have in inert. So we check additional information if we've got any other additional expenses that we don't have in the lists that are mentioned in the additional information. Remember, the issue of depreciation, you can only find about depreciation in additional information. But before we go there, we have item number 4. An outstanding amount of 1,300 rands for clothing must be written off as irrecoverable. So this is a bad debt, which is not there in the list. So we have got a bad debt 1,300 for clothing, which is the menswear department. So we indicate that one, bad debts. Thousand 300, and of course with nothing for the second column. So we go again. Remember, we put the issue of depreciation just beneath that. So for depreciation, it reads depreciation must be written off on equipment at 15% per annum on cost. So very simple. We check for the depreciations that we have for the equipment. Remember, we've got equipment 260,000 and 120. So we are going to use a rate of 15%, and it's on costs. Remember, the on cost method is percentage times cost. So it's just 15% times the cost that you are given there. So let's just try to calculate it as such, whereby we are saying depreciation for 50%. Remember, it's a decimal, it's 0.15, and then we multiply for the first column. That is the value of equipment for the value of equipment for the menswear department. We're given this is 260,000. So it's times 260,000. So let's just see what we get for menswear department depreciation. 0.15, and then we multiply by 260,000. You are supposed to get your answer is 39,000. So we have 39,000. And we also have a calculation for the sports equipment department, whereby we say also 0.15. We multiply by the cost for that. We're given it is 120. So we multiply by 120,000. So let's just see what are we supposed to get. 0.15, and then we multiply by 120,000, and we get 18,000. So we have 18,000. So that's what we have for depreciation on that part. And if you continue with our additional information, you see that we've got another additional expense that you're given at the end. Bonuses must be provided for the managers of the respective departments. As follows, menswear, we've got 2,500. So we have a bonus here, whereby menswear we've already been told is 2,500. So we come here, we indicate as such 2,500. But for the sports equipment department, we're told that sports equipment is 1% of department net sales. And we go back, we see that the net sales, remember, is the figure that we calculated here, and we got it as 425,000. 425,000, so times 1%. So we are saying 1% is 0.01 times 425,000. So let's just try to see what do we get. 0.01 is or 1% times 425,000. Get your 4,250. So here we have got 4,250. 4,250. So basically this is what we have. So we can have a continuation. So with that, we can now be able to put our lines to close. Remember, we are supposed to have the total of our expenses. So we can close. So if we add all the expenses that we have in the first column or that we have in the box for the first column, we are supposed to have a total of expenses. It's supposed to be 323,100. And which we are supposed to subtract. Remember, we are saying less. And then we add for the second column all the expenses. We're supposed to get 419,350. And we show again in brackets. So to get our net profit or loss, depending on which one is greater, remember, if you check in the first column, our gross income is greater than our less expenses here. So we're going to get a net profit, Then in the second column, we are having our gross income less than our expenses. So it's going to be a net loss. So let's start by the first column, 107,700 minus 323,100. And then we get a positive figure of 85,600. And this one is net profit. And then we go to the second column. We are saying 169,100 minus 419,350. We get a negative figure of 250,250. So we are saying 250,250. So since it's a negative, we leave it in brackets so that it's a net loss. So on the description, we are saying it's net profit or loss. So for our loss, we put a bracket so that the one that is in brackets is a loss. So this is what we have on the part. So it means we have come to the end of our departmental income statement. So we have identified that the sports equipment department is making loss. And if this happens from year to year, it means we have to close this department because it's not giving us any returns. So basically, this is what we have, guys, according to this video. Thank you for listening, and let's meet again in the next video.